Facebook earnings due out late Wednesday. Scott Kessler, equity analyst with S&P Capital IQ, joins me. Scott, what do you think the most important factor is in this quarterly report for Facebook?
I think two things. People are going to be looking at revenue growth, especially the impact of the strong dollar, which frankly had a pretty negative influence on revenues last quarter. And then their commentary and specifics around spending. Facebook has been very aggressively ramping up other offerings, other features. That has had a negative impact on margins. So if the company can show that it still has robust growth ahead and it's controlling expenses, I think that'll be a recipe for an encouraging Q2 earnings report.
And what are you looking for numbers-wise?
So we're looking for a continuation of healthy growth from the company. We see margins improving. I think what's really important is to hear indications about the company making progress with respect to a number of its growth initiatives. So everyone understands that Facebook is really big in terms of its user base and global reach. What a lot of people don't realize is that they have a number of levers to growth that they've just started to pull. So we look at video, Instagram, Messenger, and WhatsApp. Those four things, perhaps in that order, in kind of the cycle for monetization, revenues, and profits. We wouldn't be surprised if the company spent a little bit more time talking about Instagram, all the efforts that they've undertaken with respect to advertising and how they've been doing. Because I think a lot of people, number one, don't understand that Facebook owns Instagram. It's a very valuable property that's gained in importance since the acquisition. And I think, two, that they're making substantial inroads to turning Instagram from basically a free photo sharing site to a global social media platform that is generating revenues and profits over the near term.
Facebook has made some investments, and as you pointed out, there's been some big acquisitions with some of the companies you just named. Is Facebook at the point now where it doesn't need to make any other big acquisition?
Well, it's funny. We've never necessarily thought that Facebook had to do WhatsApp or had to do Oculus or had to do Instagram. And honestly, it remains to be seen whether or not the newer transactions, those being WhatsApp and Oculus, play out as people expect. I think it's fair to say that right now, if you put Oculus available for some type of auction, it could very well be worth far more than the roughly $2 billion that Facebook paid. WhatsApp, however, I think the price tag for that was closer to $20 billion. So it's really going to take a couple of years before that business is able to potentially fulfill its potential. That being said, if you look at Instagram, I don't think there's any way one could not accurately characterize that deal as just a slam dunk. It was just a very prescient, very attractively valued transaction, and Facebook continues to execute well with that business, running it somewhat independently and really not, as we talked about, turning the levers of monetization fully on.
Well, if there is still monetization to come, do you think Wall Street has it right in terms of Facebook's stock, or is it undervalued based on potential growth?
So we have had a buy recommendation on Facebook for well over a year at this point. And what I would say about that is it seems like a lot of people look at Facebook and they say it's overvalued without really doing the work. If you do the work, what you see is here's a stock that's trading at a forward PE multiple of about 50, and you look at really where the growth is going to be. We're looking for 30 to 40% growth. On next year's earnings for 2016, the stock is trading closer to 40 times earnings. So to us, we don't really see a premium valuation for what is, we think, kind of a core bellwether type name in technology, in internet, that has a lot of growth ahead of it, a strong balance sheet, and a lot of ways to win. And that's the kind of stock we like recommending.
Scott Kessler, S&P Capital IQ, thanks for your time.
Thanks a lot, Rhonda.
I'm Rhonda Schaffler for The Street.